Something is happening this weekend that every single person that has money invested absolutely cannot afford to miss. What's going to happen to the markets? And when markets open on Monday morning, March 3rd, the world is going to look very different from how it looked on Friday. And now is what gets interesting to us, because if we've been watching all along and you've been following gold, you've been also watching XAUT. What is XAUT? XAUT is basically Tether Gold. And what does that mean? Well, essentially, it's tokenized gold. It is tokenized gold, and it trades when gold does not trade. And so the world is going to look very different. What we're going to do is going to break this down a little bit for you and what happened on gold prices over the last 3 months, but most importantly, how to read the chart and understand what's going on. Now, basically what you could see is the price for this weekend, which is up. So basically gold was up on Friday, and I did a video on that, but now gold is up this weekend. I will say it was up 3%. As you could see, there was a peak during the day today, Sunday, but then things got better. And it's basically what we're looking at. We're looking at a digital token that is based 1-to-1 by real physical gold. So, because we want to see what's happening this weekend. So what's happening to gold? Well, you could see XAUT price move. You're essentially watching the price of gold move in real time, because one AXUT, which is the Tether Gold, basically equals 1 troy ounce of gold. So what you're seeing is essentially the chart, right? So what you need to understand is over time, what has happened to gold is, in December 1st, let's start at the end of December 1st, when gold was sitting around $4,300 an ounce, right? And through December, there was a slow, steady, consistent move upward. And by December 15, it had reached $4,500 per ounce, which is a gain of $200 in just 2 weeks. So this kind of movement, right? This kind of movement, slow and steady, is actually what traders love to see. It tells you people are calmly, confidently buying. Nobody's panicking in either direction. And it's organized buying, institutional buying. The big money is quietly getting in. Think of it like this. If someone's sneaking food off your plate one piece at a time, you might not notice right away. But by the time you look down, half of your meal is gone. And that's what December looked like for gold. Slow, quiet, but very real accumulation. Now, this is where things got explosive for those of you that were asleep. That's when we crossed into January 2026. And there, by January, we were around $4,800. By January 15th, we shot up to somewhere around $5,200. And then we had a peak of $5,600. So that was a gain of $1,300 per ounce from where we started in December in about 7 weeks. 7 weeks. Now, if you're thinking, wow, that's impressive, you're right, but also that spike is a warning sign. When any asset moves that fast, that aggressively in such a short period of time, smart money starts thinking one thing: we are going to be left holding the bag. That kind of parabolic rise where the line almost, goes straight up is often what we call a blow off top. Everybody who wanted to buy has bought. The fear of missing out has peaked, and now there's nobody left to push the price higher. Something triggered that January spike. We saw tensions rising. We saw global uncertainty increasing. Gold was being treated like a life jacket. Everybody wanted one. Late January. And then we fall off a cliff. From that $5,600 peak, gold absolutely collapses. From early February, right around February 2nd, we are back down to around 4,850. That's the top of 750, less than 2 weeks. Now, for someone who bought at the top, that's kind of scary. That's a loss of about 13% in 2 weeks. And for my members that are following me, you know that when I saw gold drop, I said, you know what? Buy, everybody else is selling. Remember? And I did. It's just I bought a little bit too soon because it kept on going down. So, but this is what I want you to understand. A drop like this doesn't mean gold is done. It doesn't mean the story is over. Right? A drop like this doesn't. It usually means the market is taking a breath. It's resettling. And the people who bought at the top are selling and taking profits. That's all. That selling pressure temporarily overwhelms the buyers. It's like a wave at the beach. It crashes hard, but then the water pulls back, and another wave is already forming. And that's why I created this channel, the Black Swan, so retail investors understand what's happening, follow what's going on, don't panic. And if this is, let's say, a pullback, they don't usually do what retails do. They sell, right? Buy when everybody buys and then sell when everybody sells. No, you don't want to do that. You want to do the other way around. But for you to buy when everybody else is selling, like I did when gold was dropping, my thinking was, yeah, but hold on. There's a ship. In fact, at that time there was one. Then there were two aircraft carrier of Iran, and you know they wanted to get back in there. Okay, I mean, I followed geopolitics sometime last year, and if you understand, you see, you know this was going to happen. In fact, I did a video on that. And then second, you can't go back to the U.S. You're not going to get what you want because what you want you can't get. Then you've got the whole situation with inflation, and then you've got the debt, and then you've got the election, and you got lots of things up in the air. The new Fed chair, and then now you got 2,000 lawsuits. So I knew that it was going to. The gold basically reacts to these events, and you could see today it's actually now Tether's up 1% for this weekend. There was a recovery. And sure enough, look at February. After hitting a low of 48.50, gold started climbing again. More control this time, more measured. By February 2nd to February 12th, we go from 48.50 to 5,000. From February 12th to the 21st, we're up to 52.90. By the time we reached February 28th, gold had been steadily recovering, building momentum, and then the news hit. You know the news. So, by the way, just very quickly, don't forget to subscribe and put a like to this live, because every single week we break down what's happening in the markets, plain English, no overwhelming complexity, just to explain to you what's going on. And if you want to go even deeper, you could join some of my members that are actually on the call on the live right now. And what we do is I show you what I'm doing, and then we'll see what happens. A pretty good call so far, but let's see if it continues. So let me tell you what happened today. So today, as you probably know, United States basically confirmed that it has launched what they're called major combat operations against Iran. Strikes targeted Iranian maritime facility, and Israel is conducting coordinated strikes alongside the United States. Iran obviously is not sitting still because they're defending themselves, and reports are coming that Iran has launched retaliatory missile strikes targeting, Kuwait, Qatar. They want to, that's it. They want everyone to get in there. We're talking potentially 7-8 countries now directly or indirectly pulled into this conflict. It's a fight for survival. This is it. This is a full-scale military engagement between the U.S., Israel, and Iran. So, okay, fine. But this is not, what about gold? Well, so what does war have to do with the price of gold? Let me explain to you. Gold has been considered a safe haven for literally thousands of years, right? When people are scared, when governments are unstable, when wars break out, when the economy looks shaky, they run for gold. Why? Because gold can't be printed. It cannot be created out of thin air. It holds value when paper currency and stock markets are falling apart. So when the United States and Israel start bombing Iran and Iran starts firing back, investors around the world do one thing almost automatically. They buy gold. And we already have evidence of what is happening this weekend, because while traditional markets are closed on the weekend, crypto markets are never closed. And as you could see, Tether Gold, basically, the gold token we track on this channel, has already moved on the crypto exchanges. And crypto exchanges, Hyperliquid, which trades, traders are using as a 24/7 preview of what Monday could look like, gold-linked futures have already jumped more than 5%, pushing towards $5,400, $5,300 before the regular markets even opened. So gold was already sitting around 5,200, 5,278. It's up to 5,300 before the strike happened. And experts are saying we are facing resistance at the $5,300 level. If gold breaks past that 5,300, which is just about to do, and the current geopolitical environment is absolutely the kind of catalyst that could do it, analysts are projecting gold could push up to $5,600. I need to look at also silver, by the way, this tokenized silver. So let me put that in perspective. That $5,600 level, that's the exact peak we saw of this chart in January. And we could be retesting that level again. Now, big question is, please, and if some of you are familiar, comment on that, but the Strait of Hormuz, that's a key variable. Here's the thing that markets are most scared about right now. It's the Strait of Hormuz. It's a narrow waterway about 21 miles wide of its narrowest point between Iran and Oman. About 20% of the world's supply passes through that strait every single day. If Iran decides to close or disrupt that strait, the impact on global oil prices could be immediate and massive. I don't have to remind you what happens if oil prices go up. The gold token that we're looking at is basically XAUT, which is Tether Gold USD. That's the one that is trading as we speak. So the thing is, if you have huge amount of oil, if oil goes up to above $220 a barrel and it gets disruptive, we'll be looking at oil prices nobody has seen in years. Now, of course, we're assuming, this thing could be over Monday morning, right? Basically, they quote unquote give up. And higher oil prices means higher inflation. High inflation historically drives people even harder into gold. Because what's going to happen? Are you going to fight higher inflation, right? What are you going to do? You're going to lower rates? You're going to raise rates. And that's the reason why somebody could check, but I believe that SPY is up today. It's up it's down, I'm sorry. SPY is down 1%. And so the chain reaction is as follows: war, oil disruption fear, inflation fears, gold demand, gold prices up. That's the playbook, and that's what we've been watching play out right now in real time. Now, market analysts at major institutions, Natixis, JPMorgan, are expecting a rough and risk-off open on Monday. That means stock market down, oil up, and gold up. That's the idea right now. Analysts are projecting that if the escalation continues, if you don't see a quick de-escalation, and that's why what I'm thinking, I got those positions, as you know, on gold and silver. I am not going to ride this thing no matter what, right? My view obviously is I want to get paid for the risk that I'm taking. And we shall see what the risk is. But the risk is, if you make 30%, 40% in 2 weeks, what are you looking for? 500%? Especially that, this thing gets resolved on Monday morning and then we're back again to the races because that pressure. Gold has still more to go, but that's potentially a 20% gain from where we are right now. They're looking at gold could reach somewhere between $5,300, which we're up to already, to $6,300. Now, I want to be honest with you, nobody knows exactly how Monday opens. Markets are unpredictable, especially in the first 30 minutes after major news. That's why you need to understand the risk so that you know when it's time to get out. And are you getting paid for that risk? And this is what the channel is about, and I do spend some time with my members to explain to them that is my view on risk. This is not about making money. This is about not losing any. And members certainly do appreciate that. There could be a quick sell-off followed by recovery. There could be a massive gap up, or things could stabilize faster than expected. And if there are signs of ceasefire talks, then this thing could collapse very quickly. So you have to be very careful. But I can tell you this, the setup is in place for significant move higher in gold. Now, let's connect the dot, right? In January 2026 was already a period of rising tension in the Middle East. There were failed diplomatic talks between Iran and the United States. There were growing concerns about Iran's nuclear program. There were proxy conflicts heating up in multiple countries. Gold was responding to all that uncertainty. And then the spike corrected because markets thought maybe things might cool down. Or the fact that just people took their profit. The talks were falling, and there was hope. The military option seems like a last resort. Well, it's no longer a last resort. What you're looking at is essentially the prelude to that January peak was the market pricing. There's a possibility of an escalation. What this is showing us in the market is the reality of it. There's a concept in markets called buy the rumor, sell the news. But there's also sell the rumor and buy the reality. And in the case of gold, when geopolitical events actually materialize rather than being feared, gold often gets a second win. We pulled back from 5,600 to around 4,850, and we recovered to 5,290. I was losing on that position, that gold position that I bought when the gold market went down, but I'm back to, like 2% gain, basically. And now with the military strikes happening, you're telling me that we're not going to keep going higher? We could be looking at a run back to 56 to even higher. And the patterns actually supports it. This is a powerful combination. So let me explain to some of you that might not be familiar. What is he talking about? Is this gold? Is it tokenized gold? So this Tether Gold, basically, on this channel, right, is a digital token. So each token represents, it's Bitcoin, right? It's cryptocurrency. Each token represents 1 troy ounce of physical gold held in a Swiss vault. This is important because it means you actually hold and trade gold exposure 24/7. Traditional gold markets like the COMEX are closed on weekends. And that's why we had to look at crypto exchanges for price signals this weekend. But Tether Gold trades continuously. This weekend, as the strikes happen, Tether Gold's holder, Bitcoin Gold, I guess you could call it, could actually see the price moving and react in real time. You could see the little peak there. That's a huge advantage of waiting for a gold ETF to open Monday morning. You need to decide, you need to think. And I'm sure to tell you, I'm not here to tell you what to buy or sell. This is not financial advice, by the way. But we're trying to understand, first of all, that gold trend over the weekend, what it says and what it means. So, March 3rd, what to watch? Let's talk about Monday. The first day markets are open after all of this went down. That's what they did at the weekend, obviously, because otherwise you're going to create mayhem in the market. I'm assuming that they hope to get this done and taken care of by Monday morning. That's possible. So here's what I'm personally going to be watching, and I think you should too. The first thing is the opening of gold on COMEX. When U.S. futures market open, if gold gaps up, meaning it opens significantly higher than when it closed on Friday, that tells you the market is immediately pricing in the war premium. Obviously, while it is trading over the weekend, it doesn't trade as heavy. Watch the 5,300 level specifically, that one that we're looking at right now. That level has been called a resistant point by multiple analysts. If gold opens above 5,300, which it should, because Tether Gold is at 5,307, that's significant signal, right? We could go up to 54 to 5,500. We're entering again price territory we haven't seen again since January peak. Second, you need to watch out oil prices. Oil and gold often move together in situations like this. Brent crude already jumped over $120 a barrel on war fears. Watch where oil opened on Monday. If oil continues pushing higher, especially if there are any report of disruption in the Strait of Hormuz, that will amplify the gold move. If oil stabilizes or pulls back, maybe because OPEC announced it will increase supply, or because, then gold might also seem its war premium comes off and markets are dynamic and they will trap. Watch also Iran's response. The single biggest variable going into Monday is what Iran, does next. They have fired missiles and then they've done lots of threatening and they have attacked Kuwait. Well, they've sent a missile Qatar and all that. Does this escalate further or does it peak? Right? If Iran continues to escalate and there are more strikes, and if proxy forces expand the conflict, and if the Strait of Hormuz gets involved, gold will likely continue moving higher. Although from what I see, it doesn't appear like the other countries are. It's just missiles at this point. But we shall see. If there are signs of back-channel negotiation, diplomatic signals, or if the strikes appear to be hitting of natural ceiling, gold may see a sharp but temporary spike followed by profit taking. That's what I'm going to be watching for. I'm already telling you, if I'm up 30%, I'm not going to look for 200%. I don't know what's going to happen. All I know is there's going to be risk. I want to be like Spitznagel during COVID time, right? I know something is going to happen. I don't know how long it's going to last. I don't really understand what they're going to do about COVID, but I think it's going to be disruptive. I'm putting a bunch of trades and I make 4,000%. I'm out. Okay. I already made an annualized 960% on my silver trade. So I could wait 10 years technically on that amount of money to wait. There's no hurry. I just want to learn. I want to understand what's happening. I don't want to hear about prediction. We're not here to predict anything. We're here to understand. So don't be shocked if gold dips briefly at the open, even with all of this geopolitical pressure. This can happen. In fact, this Tether was up 3% at noon, as you could see the peak, and it's down to only 1%. Well, it's still up 1% though. So a pattern analysts are referencing to what's happening back in June 2025 when Israel first struck Iranian nuclear sites, as if you may recall. Stocks sold off sharply, but then recovered once it became clear the Strait of Hormuz wasn't being disrupted. Monday could follow a similar pattern, or it could be completely different if the situation escalates further. So the point is stay informed. Don't make snap decision in the first 15 minutes and watch how the market digests the news. Now, I want to be clear, nothing in this video obviously is financial advice. I'm not a licensed financial advisor. Everything I share for you is for educational and informational purposes. You make your own decision. But I will share how I'm personally thinking about this moment. Because that's what you get when you become a member of this channel, a real look at how I think about a situation like this. I'm not going to tell you exactly which position I have. You have to be a member for that. But gold has been one of the strongest performing assets of the last several months. And you've seen it. That's a significant move. When an asset has already run that much, a question is I always ask myself is, am I buying strengths at a potentially expensive point, or is there still compelling reason to add exposure? In this case, a geopolitical situation is very different what we have seen before. This is not a skirmish. This is not a warning shot. This is the United States directly engaged in military operations against Iran. That is something they've been dying to get into for a very long time. That is a new chapter in global risk. Historically, going back decades, gold performs well in sustained period of geopolitical uncertainty. Not always in the first hours or the first days, but over weeks and months when the certainty doesn't quickly resolve. And looking at this conflict, I don't see a quick resolution. Iran doesn't have an easy path to simply stand down without losing credibility. And I don't think standing down and let's talk more is going to do anything. The US and Israel want to go all the way, clearly committed to a significant operation. And obviously, what they were negotiating, they were also planning this. So I'm personally watching to see whether gold's holds above, I guess, look at the $5,300 level on Monday. And if it does, and it shows buying support rather than panic selling, that tells us the move has legs. And if you want to follow this more closely, join me on my lives every day during trading hours at around 8:30 a.m. You have to be a member, okay? So let's bring this all home and try to understand that gold climbed $4,300 all the way to $5,600. We show correction to $4,850, and we're watching gold patiently recover to past $5,300. Markets are closed right now, but the price signals we're seeing on crypto exchanges, gold already is moving towards closer to 50. Well, it's past 5,300. So tells us something about what Monday morning is going to look like.